Good morning, guys.
Hey, how's it going?
Morning.
Happy sip
Happy
day.
Monday.
Yes, the weekly sip. I got my cup here. I'm not buying a new one.
Might be
Don't
time to
fix
buy
what
a
ain't
new one.
broke.
What are we going to
Yeah.
talk about today, guys? What's
Well,
on?
Skylar just got back from Disney World, so we're gonna have to refrain him from talking about the characters
Yes,
and talk about something financial related.
I'd love to.
sounds like a good idea. How about contribution, like for people that are contributing to a 401k? I know kind of a common question we get here at the office is, do we contribute to a traditional 401k or the plans that have that Roth contribution option? Does that make more sense? And I guess the first question I have to ask you guys, do all plans have these two options of a traditional and a Roth IRA or 401k, or does it depend upon your company? And can you add it on if it's not already available?
That's a great question, Julie. I have found that most plans today do include a Roth contribution option, although I did come across one a few weeks ago that did not. It is, legally allowed to for employers to have that option on the plan, but whether or not their plan document includes it is up to the employer. Um, and it was kind of something that was very common to be adding about 10 years ago. So I think most plans would have this. If you don't have a Roth contribution option on your plan, I would definitely speak to your employer about it. It's not an expensive fix, and the plan documents have to be rewritten every so often anyway. So, and we just did that a couple of years ago. So I think that we're going to be up maybe next year. And so they're going to have to redo their documents,
Hmm.
and there wouldn't be really any added cost to be able to do this. And if they did add it, I would imagine it be in the ballpark of like $500, but that's a really easy benefit to add to your employees at a relatively low cost.
Hmm.
So
Good to
uh,
know.
whether or not that you do the pre-tax or the traditional contribution, I think it depends on a couple of factors. Age, younger the better for the Roth. And that's also tied in with like what your current income is. If you're in a lower tax bracket, 22% or lower, I think that the Roth makes a lot of sense. But if you're in the 37% tax bracket, I would hesitate to suggest that you do the Roth contributions because you're going to be avoiding a major tax. There's a big tax savings in the deferral at a 37% tax bracket with the expectation that later on you might be in a lower tax bracket.
And Skylar, real quick, I don't mean to interrupt you, but you're using the word Roth. For those who may not know what a Roth is and how it's taxed, can you just clarify what it means to be a Roth 401k?
Yes, so a 401k, they have different kinds of contributions that you can do to it. The traditional 401k, when this all first started, when they first came out, allowed participants to, instead of taking money in their paycheck and paying tax on it, they could put the money into a traditional 401k contribution where they deferred the tax. So if you were to contribute $100 to your, per paycheck to your 401k, and you were in the 22% tax bracket for a federal level, 8% tax bracket at a state level, $70 would hit your paycheck, but you get $100 that would go in because you didn't pay tax on that $100. And then when you take the distributions, then those distributions at retirement are taxed at your tax rate at the time of the distribution. Roth allows you to pay the taxes today. You take $100 out of your paycheck, and then $100 goes into your account. And then when you take the distributions, you're not taxed at all. So it's a choice. Traditional is pay the taxes later, or Roth is pay the taxes now, and then the benefit is all of the investment growth is tax free.
Yeah, so essentially with the traditional, you pay taxes on the investment growth, like Skylar just said, but with the Roth, you get out of the investment growth taxes, which is a huge benefit for
It can
sure.
be depending on what your tax rate is. So
Correct. Correct.
the traditional thinking was, hey, I'm working now. I have my highest income because I'm working, and when I'm retired, I'm not going to have so much income, so I may be in a lower tax bracket. So why can't I just defer the taxes until a later date when I'll be subject to a lower income tax rate?
Hmm.
So the Roth came out, and the the premise here is that we don't know what taxes are going to be in the future. If they happen to be higher in the future than they are now, then you may end up paying more tax by delaying. So if you could pay the taxes today and get tax-free distributions upon retirement, that's beneficial. And it's also good to have a mix because if you have all pre-tax contributions that are traditional, then when you take that money out, if you wanted to access a larger chunk, like say you want to make a purchase like a boat or something, to get 70,000 dollars out, you can't just take 70,000 out. You got to take $100,000 out. Depending on what your tax rates are. But you have to take a much larger distribution to be able to get the after-tax amount because of the tax that you're going to be paying, and that could push you into a higher tax bracket than what you would otherwise. So if you have the Roth contribution, it's a little bit more flexibility. Um, yeah. But we could take a look at some examples of like pre-tax or after-tax,
Yeah, I think that would make
how
sense.
they how they compare.
I'm a very much a visual person, so to be able to see these numbers, do you have something that you can pull up for us? I don't know, Tucker, do you have something?
I do actually.
You
I
do.
have something pulled up. It's just a quick little calculator, kind of shows the comparison between if you're making contributions on a pre-tax traditional basis or a post-tax Roth basis. So can you guys see my screen okay?
Can you make it bigger?
Absolutely.
I'm not sure. I think I can.
See in the top right.
Is this
No, no,
Control plus.
one over, right next to the plus, in the middle,
right.
the square.
Whoa.
Never mind. Don't worry about it. You're good. Continue.
Sorry, guys. Control plus. There we go. Oh, wow. Look at that. I'm
Um,
on it. There we go. Technology. All right. So what we have here, like I was saying, we have the basic little calculator can kind of show you what your final amount will look like when you get to retirement if you have been doing pre-tax traditional or post-tax Roth. So we're going to start with the current age. I'm going to ask Skylar because I don't think it's appropriate for me to ask Julie her age, even though she looks younger than both of us.
Absolutely not.
Uh, so
Good move.
Skylar, so Skylar, what is your age?
38.
All right. And then we're going to say you're going to retire at 65. I know you want to retire at 39, but we're going to keep
No, it's gonna
65.
be it's I'm gonna retire 70.
So you want to do 70? All right.
Yeah.
70. And then annual contribution, what do you want to do? About 12,000? Use that as a proxy?
Well, let's use that 23,500 as a maximum contribution that I could do today.
Okay. 23,500. And why is that the amount we're choosing?
That's the highest amount that
Mm,
you could contribute to a 401k on a Roth or pre-tax basis as a
mm.
38-year-old.
Got it. Okay. All right. Expected rate of return, we'll choose a 7. All right. And then we have a current tax rate of 22 and a retirement tax rate of 22 as well. So here's our final judgment. As you can see, with the Roth 401k, there is about $150,000 more available to the participant than there would be in a traditional 401k, which is very interesting.
Well, that's going to be your total.
Hmm.
And then look at what the if you hit the drop down there on the right, it looks like there's an after-tax comparison. Oh, this is just a chart here
Just
then,
the chart, yeah, kind of shows.
showing the difference.
Yep.
All right, well, it looks like there's another button here up at the top that would allow us to see is like, say you maxed every year because it'll show you the increase.
Yep.
I'm salivating too because these numbers look big.
Right, right. They're very gotta love that. All right. So it looks like because we already had the maximum number in here, it didn't really change much. Um, but obviously, not obviously, but pretty much every year, with the exception of, every couple of years, this number goes up by a couple $100, maybe at 500 to $1,000 a year to make adjustments, right?
Yeah, it's saying to increase future amounts by the maximum allowed. It may have you refreshed to make the change because that should show some step ups.
Let's see here. Looks about the same.
Calculate.
There you go, right at the bottom. Yep.
All right. Well, no differences there. Didn't change anything. But we can play around with the retirement tax rate and the current tax rate.
Yeah, I
J-
think yeah that would be great. My thought is that we're about 35 or more trillion dollars in debt as a nation, and that can't go on forever. And the
mhm.
government shuts down every October to because they can't decide on the budget. So
Right.
my expectation is that we're going to see higher taxes in the future.
Okay. So then we can keep the 22, but maybe we bump this one up to, what do
I
you,
would maybe like a 30% tax rate,
I was thinking 30 as well.
hypothetically.
So yeah, the Roth number did not change, but the traditional number went down by about 200,000,
Hmm.
which is very interesting. So really, really powerful tool to see the difference in what doing Roth 401k contributions will have an impact on your retirement. And kind of like you said, Sky, I feel like it's a good idea to maybe do a little bit of both because you never know what taxes you're going to do. But the Roth really is a very powerful tool.
Yeah. And this is also assuming that you having any tax savings that you get from the traditional contributions that are put into a side pot.
Hmm.
So you're actually saving a little bit more than that 23,500. So if you were to not invest that additional amount and you just did a straight contribution, I think this would be even a little bit there'd be a greater disparity to the benefit of the Roth.
Hmm.
Um, and about the blend or a mixture of it, if you already have a lot of pre-tax savings, that would be a good reason to start doing a Roth contribution. And the other thing is the Secure Act is allowing employers to make Roth contributions on your behalf as employer contribution. The mechanics of that hasn't been worked out for many of the 401k providers at large. So really, though, if you're contributing to a 401k and you're getting an employer match, the matching contribution coming from the employer is going to be pre-tax. So if you were to, contribute um, on the Roth portion, then you're already getting a pre-tax contribution from the employer. So it's already
Hmm.
sort of blended in that way.
Right.
This is all really,
Cool.
really good information. I know we went over our time limit here, but definitely reach out to your financial advisor, or if we are your financial advisor, we can run these illustrations for your individual situations. We also had a new feature that just launched on your account view profile where you can actually use calculators to kind of run these illustrations specific to your situation. So definitely give us a call and we'd be more than happy to help navigate all this for you. So this was great, guys. Thank you
Absolutely.
so much for this information. Have a
All right,
good
thanks,
one.
You
Julie.
guys.
See ya.
All right.
Later, Tucker.
Bye-bye.
Bye, guys.